Hey everyone, ABJ here again. Just wanted to make a quick little recap on today. Today's trade day was quite a good one, I'll say. I do hate being red on stream, but I do like showcasing how we can turn a red day into a green day by just trading one of our strategies that we love to trade. It's called defensive trading. So what we're doing is we're putting on these defensive positions like credit spreads, iron condors, to collect credit when we are just not doing too well debiting the market. Usually, I like to start off my days, my trade days, with credit first. I do have an ideology on the market that I like to trade. It's really helped me perform well. It's starting off with credit, letting the market pay me first before I pay the market. So collecting credit before I decide to spend on debits, right? So today we had a bit of a flush. Now the open of the day definitely threw us off. Delta, gamma profiles, even the Vanna profiles, they were actually quite bullish on the day. But net drift really continued to show us that puts were getting hammered on the ask here, ending the day with almost 7 million in divergence versus calls and puts. So puts almost $7 million more worth of puts purchased versus calls. And so, when we opened the day, one of the first trades I put on was an iron condor. So I was actually, I made a note here. So this is my original position. So 64.10, that was my short leg. 64.20. And then that's my top side. Bottom side, I was short the 63.35 and then 63.25. So both 10 wides for an 85 credit. And this position, it was pretty good. I didn't have any fears that 63.35 was going to get broken at the time, but as the market shifted, we needed to be, you can't marry your bias, right? That's something we talk a lot about in quant data. We need to be able to pivot, and we need to be able to change our minds on a position rather quickly so that we can save ourselves, right? We can protect our capital and make sure that we can continue trading. So it's a lot easier to visualize this. So I'm actually gonna do this. So snipping tool. So this was today's price action, right? And so if you kind of imagine that we sold 64.10 up here, and then we sold 63.35. So this is kind of our two legs. So we need price generally to stay within this area for us to survive, right? But something that we talk a lot about in quant data is actually using credit spreads defensively, and not so much rolling them, but adjusting them as time goes on to, make sure that we buffer ourselves when we're wrong. So as we breach 63.35 on the downside, we did have to close the losing side. So this is kind of usually how I run my days on losing condors, on adjusting them. So when 60, we opened around here. This was 63.80ish, right? We sold 64.10, so we had a lot of room on the upside. I'll actually draw this a lot better here, like this. I'll do this. This is a lot better. So 64.10 was like up here. We sold that, and then 63.35 we sold that. That's like right here. So you can see when we did get breached, things didn't look too good for us. When we get close to these, right, the idea is to close out the losing side and sell even further down. But what I've been doing recently is, so this is the original condor. This is where we need. We have the ceiling and the floor. The floor got breached. What I did was I leave the call side open because, by that time, this is already dwindled to nothing. There's no chance of us reclaiming this level here. I actually sell even further. So we ended up selling 6,300. And then, because we know that price is probably going to come down even lower, based on price action, based on the net drift and the data profiles, we were able to also make it into a new condor. So this is our new one, 6350. So we're just adjusting it down. We're going to leave the winning side and we're going to start selling even lower. There's something else that we also did as price came down. For this iron condor, I actually like to start loading in onto the winning side at some point. When we start to come really low, I start to load in to 64.10 to kind of buffer the potential damage of this. Now, I didn't know at the time we were going to break 63.35. Again, when we did, that is when I had to make that decision that, okay, we're probably going to come lower. We know 6,300 was a very strong level. It's a very strong psychological level. But based on gamma as well, I'll show you why we decided that 6,300 was likely not going to break. So this is gamma down here. This is delta. Obviously, delta looks very bearish. So we chose 6,300 because we saw that if you guys understand quantitative and you guys understand gamma, this is the magnet for price, 63.10. So this is all the market wanted, right? The market didn't really look for any further than 6,300, right? The market's not gonna work to push further than 63.10 because this is where all the interest is. This is the obligation of the market. Now you can see right here we actually went to 63. Let me check the low of the day really quick here. I believe we got to 63.10, 63.10.32. That's as accurate as we can get. So we actually got there. We got there, and well, there was that's it. And so that is why we chose 6,300 as our short leg. We ended up winning on this condor. Everything was fine, and we definitely won on the 64.10. So we didn't have to touch that one at all. We just let it expire, and even when we piled into it, it just continued to expire. So we just buffer. So this is kind of what we do to trade defensively. We make sure that, okay, this side's winning, so we're going to start piling it on. When we start to lose on a position here, we start to adjust it lower to a new point of interest that isn't likely going to be met. And then we also sell across the top due. So I just explained about why we sold 6,300. Why we chose 6,350 was actually at that time when we started to break down around 11 a.m.-ish. I believe we started opening here. We can kind of see that we were already starting to traverse into negative territory. 6,350 was a really good flat number. And if you look on the profile here, this is all resistance. All of this is resistance. 63.25, 63.30. A little bit of a pothole here, 63.35. But you can see that the interest for the market is downside. So it felt safe to sell at this psychological level, the 63.50 area, to sell this condor, sell this call credit spread as well. So this is what we did to adjust the day, and this was the results in the end. I know everyone was like, "Oh wow, ABJ, how'd you turn a negative $2,000 day into a positive $2,000 day?" It's from this adjusting of iron condors to make sure that we were able to buffer some of the moves that we were wrong on, right? And this is the importance of kind of not marrying your bias, being able to pivot when the situation calls for it. And yeah, that's how we did it. And so tomorrow, one more day of trading. It should be a good one. I'll catch you guys tomorrow.